To Monday Night Futures Live. I think this is the largest number of sequential. Actually, no, last week was not a 3-day weekend, but we've had a lot of Monday Night Futures Live lately. So lots of 3-day weekends. I hope everybody had an awesome weekend. I'm psyched for the new trading week. The futures markets were open today. We'll take a look at what happened. Not much, really, to be honest with you. We'll take a look at the opening price action of the futures. We're going to go over. We're going to go over a lot of headlines that are out there. I'm not going to go into a deep dive on each topic. I'm just going to try to blend the headlines together because what we're seeing is really an unwinding. There's something happening. I don't know whether it's a break in the matrix or whether or not it's going to cause the matrix to really try to hold on to power here and do something dramatic because something is really, really wrong. And I'm going to go over those headlines in a moment. We're going to talk about nat gas. I want to go over nat gas. We have a polar vortex coming down. Nat gas has gotten beat up quite a bit these past several months. Really, really bad. Monthly breakdown. And we have a position now. We are short of the puts, 1250 puts on Boyle. I think we're slightly underwater on that trade, but credit taken into consideration if they're put to us right now, probably about break even. But I think that we're going to get a pop this week on nat gas. I haven't taken a look at the futures yet. I will. We're going to talk about CPI, Peter Schiff, and a lot more. So, of course, we're going to be doing a chart request. Hold your requests until we no comments yet. Can I be heard? Oh boy. How's my audio? I've never seen no comments before. All right, there we go. Trader Isaac. Okay. Thanks, Jeff. All right, cool. All right, so let's get to it. I want to kick things off with this. John Maynard Keynes. Markets can remain irrational. Let me share my screen here. Thanks, Trader Isaac. Sean, thank you. Paul, my wife thinks you're getting. Thank you very much. I actually put on weight because of that hip surgery I had, but I'm back in the gym. I probably dropped a few pounds. So I'm trying to. I got a little bit weight around the gut. I got a couple more pounds to drop, but I'm trying to build muscle on it. So I'm working on it. But thank you. Thank you for the concern. Let's say hello to people. Of course, Paul and Paul's wife. Hello. Denny, hello. Mr. Pete, hello. Trader Isaac, of course. Jeff, we got Trader Isaac, Sean, and a bunch of people will be popping in. I don't expect a big crowd tonight, so we're just going to get to it. All right, so John Maynard Keynes. Markets can remain irrational longer than they can remain solvent. Markets can remain irrational longer than they can remain solvent. What does that mean? It means that hopium can go a long, long way. Now, I'm going to talk about this in a little bit when I go to Peter Schiff's comments with regard to inflation. Now, Peter Schiff, who I am a big, big fan of, economics-wise, huge fan. In terms of market timing, not the best. With all due respect to Peter, but in terms of economic tea leaf reading, he's the man. He is the man. So we'll go to him in a moment. But first, let's kick things off with the futures action, and we'll take a look at how things are opening up. It was kind of a wild ride today in the futures market, but let's face it was thin volume. We can't read a lot into that. Let's kick things off with equities first, since we have the EMinis up top here. Let's go to the big chart. Let's bring it up. We opened down. Looks like we're coming off the lows of the session. This is a weekly chart. Let's do a deep dive. Here's a 30-minute chart looking very, very good. We have a higher low. We're above 4,000 on the E-minis. We have a little bit more room to the upside to go here, but not much before we hit real serious resistance. But I do think that we're probably going to head up higher. The Russell 2000, the small caps, 30-minute chart, a very similar chart as to what we're seeing on the S&P 500. We have a lower high here, 30-minute chart, but let's face it, it's an intraday chart, very volatile. We're not day traders, so I'm not going to read all too much into it. I'll worry about a double top on a daily chart, weekly chart, monthly chart, even a 4-hour chart, but not a 30-minute chart. Again, we're not day traders. So we're off the lows of the session. They tried to take them down. As you can see here, this is a 15-minute chart, bullish reversal bar. S&Ps are going to look the same thing. Let's take a look at the NASDAQ 100. These are your triple Q names. I should have had these ready. I thought I did. I did not. So the Q names, again, look at your 30-minute chart here. Another lower high. Remember, the market was open today. The futures market was open today. So we have a very tight triangle formation on the EMinis. I think this gets resolved to the upside. I think technically speaking, there's more room to go here. We're also in the midst of silly season. What is silly season? Silly season is earnings season. And when there's earnings season and you haven't had a lot of bad news just yet, path of least resistance is to the upside. We are still down on the session. Let's move on over to the currency market. And the dollar is moving lower. But I'm kind of suspect of the move on the dollar. And we're going to talk about that in greater detail in a few minutes, because we are long of a lot of core positions that we have are gold mining stocks, silver mining stocks, silver, gold, emerging markets. All of them are inversely correlated to the US dollar. So what's the first thing I do when I check my iPhone when I wake up in the morning at 4:15? I look at the dollar, because that's going to set the tone for my day. Now, for the past 2 years, up until about 3 months ago, it didn't go my way. It was a pretty rough go, but we kept accumulating. And as the dollar got very, very overbought, we kept stepping into the breach, and now it's paying off. Now, there are events that are unfolding very, very soon that could put a bid in under the dollar. So I'm watching this very, very carefully. Again, stick around. We're going to talk more about what that bid might look like and why it may occur. So the US dollar continues to put in lower lows. Let's get rid of all of this. In fact, I want to restart. Sometimes it's best just to get rid of your old annotations, because things get messy. It looks like spaghetti, and just get started anew. Now, what I'm doing here on a 4-hour chart, I use a 4-hour chart as like my early warning signal for a daily chart for timing trades. So I do a lot of annotations. And as we get closer and closer to pulling the trigger on a trade, we'll start looking at 30-minute charts, 15-minute charts, and then build. Now, here is our narrowing downtrend channel. Narrowing, so therefore it is a wedge formation. So what I'm looking for now is now that we're probing, or we have probed down to the lower band of support, I want to see whether or not we are able to break out. Guess what? We have within the channel. No great surprise there. That's supposed to happen. The question now is this. Do we continue up to 104.50 and break out above it? If we do, that means I'm selling covered calls on my gold mining and silver mining stocks to put on a hedge against a stronger US dollar. So the weekly chart of the US dollar looks like dog, you know what? Dog excrement. The intra-period chart here, the intra-day chart looks not great, but we're bouncing off of a support level. It's being respected. So we have to expect a little bit of consolidation and then a bias to the upside on the dollar. That doesn't mean that gold and silver are going to roll over unless, of course, we begin to break out of this downtrend channel. So we're going to be watching it carefully. Now that we have a good feel for where the dollar's at, now we want to take a look at the price of gold and other commodities. Because remember what's driving the market right now. The market is being driven up by hopium, right? What is hopium? Hopium is hope mixed with opium, right? People get a dopamine hit by virtue of the fact that they're going to see a pivot by the Federal Reserve. But you need to take into consideration that the CPI that we've just had out is a lagging indicator. It's telling you what CPI was last month, not this month, and it's certainly not forward-looking. So as we walk through these commodities tonight, I want you to pay attention to not the intraday chart or the daily chart. Pay attention to the weekly chart and how these trades on the commodity front are setting up. Also, think about equities. Equities are moving up. Guess what? That's inflation. That was the first bubble to go. So if they're goosing the markets up yet again, and we're going to go to valuations in a moment, you're going to see inflation in equities is still alive and present. So gold is down on the session. We have overhead supply immediately above. We are firmly above 1900 now, but we got as high as 1931.8. That was on the 15th, last night. We may be doing a little bit of a rollover here. 4-hour chart. Not much happening here whatsoever. Very thin trade. No great shock. Just keep an eye on gold. It's come a long way very, very quickly. Let's check out silver. And then we're going to go to the weekly charts of not just agriculture as we normally do, but we're going to take a look at base metals. Silver up nearly a third of a percentage point. Good. TZ Burton. Hello, brother. How you doing? Okay. Now let's go to the weekly chart and let's talk about what the media will not talk about. They don't want to talk about forward-looking inflation. No. They want you to buy into the fact that there's no more inflation. There's a problem with that. I'm going to take you back first to the US dollar. The US dollar has been in free fall ever since it topped out back here in September. Now, keep in mind something, that while our investments in gold and silver have done very, very well because of this declining US dollar and emerging markets as well, it's inflationary. Remember, commodities by and large are priced in US dollars. So if you see the US dollar take a hit, well, the price of oil, the price of gold, as you've seen, the price of base metals goes up in value because they're denominated in US dollars. Therefore, it's going to take more US dollars to buy the same amount of that product as it did the prior year. Therefore, inflation. So when we take a look at other metals, let's take a look at copper, a base metal. Copper, nobody's talking about this. Copper is breaking out. A very nice move. I think this is last week's move. No, this is today. This red candlestick is today. What are the metals? I brought up a chart of U.S. steel as well, just to show you. It's, pardon that, I hate that noise. Sorry about that. U.S. steel, it trades along with steel prices. U.S. steel, higher lows, higher highs, it's going up. You want to look at more, take a look at light sweet crude. This is today's candlestick weekly chart, but look at last week's candlestick. What we're doing here is quite possibly getting set up for a higher low and a breakout to new higher highs. So right now, the equity market is pricing in a Federal Reserve that is going to pivot. If you see light sweet crude begin to break out above this upper band of resistance, every tick that we move far away from this breakout point in green, it reduces the probability that the Federal Reserve is going to be all the more accommodative. Therefore, equities come under pressure. Home heating oil. Let's clear all these up. Higher lows. We're consolidating. Remember, China is reopening. Therefore, the demand is going to come on hard and strong. And what did we do? We took our strategic petroleum reserves. We sold them to China. Now we have to go back in, and they'll do it after the price of oil skyrockets up higher, and we have to refill the strategic petroleum reserve with more expensive oil. So nice consolidation here on home heating oil. Reminds me, I need to buy home heating oil and fill up in advance. Let's take a look at nat gas. We'll go over a story out that nat gas is probably going to come under some demand this week. Yeah, look at this, up 7% on the session. Look at that move. We're off the highs. So you can bet your bottom dollar that we're going to be doing something with nat gas this week. What we'll be looking for is a breakout. Let's bring up the 4-hour chart. Let's clean this sucker up. Yeah, we have a breakout on a 4-hour time frame, nat gas spot. Here's an undercut double bottom. That was on Friday. Yeah, so we're probably going to be doing something with natural gas this week. I'm liking RSI. RSI, higher lows. And now we have higher highs. We've broken out on the polar vortex that is coming down to hit North America. Now, going back to the weekly charts, again, going back to look at this candlestick on the weekly chart on nat gas already. Look at that beautiful breakout. CNBC is not going to talk about this. Let's take a look at ag prices. So ag prices, which have been weak for a while now, they have firmed up. So here's corn. Bullish reversal bar last week, and it broke out. So corn getting ready for a continuation move out of this weekly base. And the thing about weekly consolidations versus daily consolidations versus intraday consolidations, I use a phrase, and the phrase is, or the old trader's adage is, the longer the consolidation, the greater the validation of any breakout. So this move, this consolidation on a weekly time frame, several months here, we had peaked out back in April, a very long-term base from which to break out of. Path of least resistance remains higher for corn. Watch out for those supermarket prices. And this is the forward-looking analysis that we're doing. We're not waiting for the government's numbers for January, which come out in February. We're taking a look at the data right now. We're not going to wait for the government. We don't need to. Let's clear this up. Now, wheat prices remain under some pressure, but I'll tell you, it looks as though we traded outside of this downtrend channel. And this is not as bearish as it may seem. It's not overly bullish. Let's call it neutral. We broke out back here. The week of the 26th, pulled back and failed to hold. And then the next week, we rallied back to say, let's just say we closed at resistance. The proof will be in the pudding whether or not wheat has got a bid, if in fact we're able to break out above this prior week's high, or 2 weeks, the highs from 2 weeks ago. So all of this, what we're doing is we're studying inflation in real time. Before we leave, I want to take a look at I got to really clean this up, man. Japanese yen. The Japanese yen has been on a tear. It's got more room to go. The euro. Euro is at resistance, and that's as of today. It's trying to move higher, but it's being rejected. Let's take a quick look at the dollar. Still not catching a bid for whatever reason. I think that's going to change. I think the dollar is going to catch a bid with the euro at resistance. So I would not bet. I think that this is a bear trap on the U.S. dollar. Look at RSI. With RSI's down below 20, down below 15 on it's granted it's only a 1 minute chart. We're leaning into the third standard deviation Bollinger Band. If I was a day trader, I'd be a buyer of the dollar right here in anticipation of a counter trend move. Doesn't mean we're going to break out, but it's certainly the probabilities favor bulls right now on an intraday basis. Let's go back to John Maynard Keynes. For those folks that are just joining in, markets can remain irrational longer than remain solvent. You can remain solvent. I became aware of this back in the dot-com bubble. I learned the hard way. John Maynard Keynes. Never, ever forget this. And when you're shorting, this really matters dramatically, because remember, over the course of time, markets are up, what, 70, 80% of the time? So a short bet is usually a bad bet. That being said, if you wait for the markets to break and then trade that trend, then the probabilities of making money from the short side increase exponentially. So that's a lesson learned, and this is always at the back of my mind. I'm glad they published this here. All right, economic data coming out this week. We have Empire State Manufacturing Index, not a big market. Retail sales coming out on Wednesday. We're going to get the producer price index. That's inflation at the producer level. Industrial production, capacity utilization, business inventories, big one. These companies have had big, especially the retailers, big inventory builds, and they got to bring them down. That's why you're seeing a bit of deflation at the retail level, because they're clearing their inventory. On Thursday, initial jobless claims, we get that each week. The Philly Fed index, that's the leading indicators for the Federal Reserve. And we get building permits and housing starts. Friday, nothing really happening. Existing home sales. It's not a big market mover. Let's move on to earnings this coming week. We're going into the new trading week with a ton of cash. We booked our profits on Tesla. We booked our profits on Amazon, Coinbase. What else? Microsoft. Probably a couple others I forgot. But we're going in. Remember this time last week, I said we're going to be going into last week with the intent of building cash positions. We went into the year long. But with earnings coming up, I do not want to own individual equities going into earnings. It's just not what we do. I'll put on a straddle, a strangle. I'll sell premium against earnings, but I will not go into earnings with a large swing trade position. I'd rather just book my profits, see how everything plays out. So tomorrow, Morgan Stanley, Goldman Sachs, and the AM, watch Silvergate. They are very levered towards that FTX scam. What else is coming out? After the close tomorrow, United Airlines, not much else. Charles Schwab, not a big play. After the close on Wednesday, Alcoa, interesting play. I don't see anything here for us to trade on earnings until we get to Thursday, and that will be Netflix. But I got to be honest with you. As it stands right now, I'll even show you what we look at, and the markets or market makers are not pumping enough volatility into these earnings. I mean, implied volatility is only 35%. I mean, I can't trade earnings on premium like that. So I'm not going to get paid enough money to take on the risk. So there's a very good possibility that I'll do a post-earnings trade on Netflix, especially if they miss on earnings or guidance and it brings the shares down. But right now, they're anticipating over a $30 move. That's up from $29 and change as of Friday. They're pumping the anticipated move up a bit higher, yet they're not pumping enough juice into these options for me to want to take on that undefined risk. So either A, we're not going to get a dramatic amount of movement on these stocks because a lot of the anticipation that's expected out of the earnings is already priced into the stocks. So we may not be doing as many earnings trades. If Netflix misses and they spike up the implied volatility, that'll probably carry through to the rest of the tech stocks, and we'll revisit it. But right now, we need to get paid. We're sellers of premium. We're not buying the options. We're selling the options. Therefore, we are the casino. We are the bank. We need the odds to be in our favor. If they're not, we walk away. Valuations. So no great shock that valuations are higher than where we were this time last week. We are now trading on the Schiller PE ratio at 29.24. That's relative to the mean at 17. Are stocks cheap? No, no, they're not cheap by any stretch of the imagination. And in fact, when you take a look at S&P real earnings growth is just falling off of a cliff. Oh, if you're looking at this over here, yes, I'm booking a trip to possibly England. That's a question mark. Definitely Paris, definitely Italy. So yeah, I'm shopping around. So keep this in mind. S&P earnings growth, big trouble. Buffett Indicator. It says fairly valued. However, we know because we watched this so much that the Buffett Indicator got more expensive last week, and we are still well above. In fact, we are 28% above historical trend. Now, in terms of seasonality, and as I look at this chart, I put up my top 5 charts for the new trading week. It's posted on my website, thecontrariantrader.com. It's also posted on YouTube, StockTwits, Twitter, SPY. Let's take a look at seasonality for the next couple of weeks. We're using TrendSpider, 35% discount code below. Use that link. Now, we've been talking about this. Like seasonality is not about definites, right? It's not a guarantee. It's only a probability, okay? We're using historical data on the S&P 500 going back 19 years. Not insignificant. Now, did we get a Santa Claus rally this year as we normally do using seasonality? No, we didn't. We did get a positive boost in the market, seasonality for the first 2 weeks. That's now in the rearview mirror. We are now heading into a trading week that is up usually only 39% of the times, and average that out to about 45% up over the next 3 weeks. So the next 3 weeks, on average, you have the market up less than 50% of the time. That changes week 6, okay? So how do you use this data? Well, you use it in terms of position sizing. If you've gotten a little bit away from your discipline of putting on new trades because it's been a strong market of late, maybe you want to revisit your discipline with opening a trade, building a trade, sizing that trade, tightening up your stops a little bit. Let's take a quick peek at the trip cues, seasonality-wise. Did not mean to do that. What happened here? There we go. Okay, seasonality for the trip cues, even worse for the trip cues for the next 3 weeks. So warning flag on the track. Be very, very careful. Now, the upside is that week 6 is a very strong week, and it stays strong for the next 3-4 weeks. Okay, so I started off this show tonight talking about how something's up. We've known that the matrix has been kind of volatile of late, and now they are beginning to kill their own. So all of a sudden, out of the blue, you have documents, classified documents being found at multiple locations for President Biden. This is not political. What I learned very early on in this business is when after the dot-com bubble, and I really saw how the game was played and how narratives is spun and how manipulation how manipulation on a grand scale is very, very easy to do when you have the media in your back pocket. So in this case here, I look at this and I say to myself, as I do with the market, there are no coincidences. There are no coincidences. The minute that you say it's different this time, that's when you lose. There are no coincidences. The fact that all of this is coming up right now, along with the World Economic Forum meeting effective today, and I want to call out John Kerry, the so-called climate czar, this monster of a human being, and all of the Americans that went over there, the woke that went over there on Martin Luther King Day. How dare you preach to us on your private jets over in Davos on a U.S. national holiday celebrating a great man. I honestly believe he's a great man, Martin Luther King. So shame on them. So we have this opening up, and then two of the greatest Bond villains, real life Bond villains aren't even showing up. They have 5,000 troops surrounding this little community here. So you have George Soros and Klaus Schwab. They make Bond villains look like, I don't know, children. They're not showing up for this show. You're going to tell me this Ukraine World Economic Forum, this Japan's experts baffled by high COVID deaths despite vaccination rate, this Adam Schiff, of all people, Adam Schiff admits possible national security jeopardized with Biden documents. This guy's an arch criminal. He's a traitor to this country. And he's throwing his president under the bus. There's something very, very wrong in the matrix. And then you get this. This was a news dump on Saturday of all days. If you want to give news out to the public, you do it on a Saturday. You don't want to do it on a Sunday because then it gets talked about on the Sunday shows. You do it on a Saturday, quietly, drip, drip, drip. Doctors call for a withdrawal of Pfizer, Moderna, COVID-19 vaccines following new research. Who are the anarchists that pushed this? You guessed it. Your friends over at the World Economic Forum. They pushed for this vaccine, this medical tyranny. Remember vaccine passports? They pushed for all this. And now you have the CDC finally having to admit stroke concerns over Pfizer jab warrant investigation. So things are beginning to break. And I feel so freaking horrible. My family, I never got this shot. I feel so horrible for my kids, my wife, my family who did get it. And this is going to be how they spin this one and remain out of jail. There needs to be military tribunals. All right. Peter Schiff. Now, again, Peter Schiff is a hero of mine, an economic hero. A trading hero? No, he's not he's not a good market timer. Peter, I know you're not watching, but just in case somebody pushes it to you, I love you. I pray at your economic altar. I am a believer. However, sometimes you're a little bit early. You're a little bit early. All right, so all due respect, okay? Love you, Peter. Now, the recession everybody denies exists is going to get worse. Folks, we've been saying this here for months. We went into recession in Q2. That would be the second quarter of back-to-back negative GDP before Wikipedia and all the academics changed the definition of recession and how you arrive at one. That's the way traditionally you measure whether you were in a recession. 2 back-to-back quarters of negative GDP. Simple as that. Peter gets it. He didn't sell out. CNBC, Fox Business News, most of the media has sold out. They still play the game. We're not in recession because they conveniently forgot the old definition because they want to toe the line. They do not want to. They don't want to get out of lockstep with the tyrants in D.C. So, Peter, we don't know this yet. I don't think it's going to be a good year for the stock market. I think it's way too early to call. I'm not going to do it tonight because I sometimes I lose subscribers. I did last week. I set a goal for 7,000 subscribers, and after the show, we had more subscribers. A few days later, I had less subscribers than I did last Sunday before the show. So I don't know what I'm doing wrong. Leave a comment below. Tell me what I'm doing wrong. If you have any feedback, please provide it because it's driving me crazy. So we don't know whether or not the year is going to be negative for the stock market or not. I took a quick peek at the yield curve. The yield curve has not steepened relative to December. We'll go back to talking about the yield curve on this show once we begin to see a bid under the yield curve. Right now, we don't have it. Therefore, equities could still press up higher. Here's where I think he's right. I think there are going to be some stocks that do well. In yellow, though, unfortunately, most Americans don't own these stocks. What he's referring to are gold stocks, silver stocks, emerging markets. Why? It's because they're not sexy. And nobody on the street is talking about them. But that's when you want to start buying them, when you know that the charts are setting up for a big, big move. The street is not going to advertise their long position. They're not going to do it. They're accumulating a position. When they're going to go on to Fox Business and CNBC and say, my God, you got to own these cheap gold stocks, they'll have a full position. Then they'll be talking their book. They're not doing it yet. So that's what he's referring to here. You could add into that emerging markets. People are looking for Amazon to go back to its old glories. It's probably not going to happen this year. It's probably going to be a value-orientated year. Dividends. What else? What other people miss as well is that they're not paying attention to correlations. What do I mean by that? They're listening to the guy on CNBC. You folks get it. You're here right now getting a different perspective. So my hat off to you that you take the time to get a different perspective, a different narrative, if you will, from the squawking heads on CNBC. Now, if you're looking to buy gold stocks right now, I would say, you know what? Maybe you want to hold off a little bit. I'm not going to talk my big book to you. I think that we're probably going to get a bid under the U.S. dollar. This goes back to correlations. If you see a bid under the U.S. dollar, as long as the dollar stays bid, gold stocks are going to pull back. You want to buy those gold stocks when the dollar appears to be ready to hit resistance. You see a good setup on the gold stocks, then nibble, nibble, nibble. Then once the dollar rolls over again, add more to your gold mining stock. That's the way to play it. So I'm not going to play this video for you. I know what Peter's going to say. You got to be buying these stocks now. I don't agree with that unless you are willing to wait out a storm that could last several months before you see more upside gains. Let's face it, the gold stocks and silver stocks have had a heck of a run. Can they move up higher? Absolutely. Would I suggest that you go all in right here, right now? No. And that's me being long. I would never tell you to buy something if I didn't believe that you should buy it at a given price point just because I own it. I won't do that. Now, we spoke earlier about market makers not pricing in a lot of volatility into these options trades. And one other thing I'm worried about is that volatility has really gotten crushed. And remember back, we just went over weekly historical performance of the S&P 500 and the triple Qs. We're going into a couple of weeks where it's going to be rough sledding, historically speaking. We don't know factually if that's what's going to occur. I don't have a crystal ball. We can only talk about probabilities. So how do we reinforce our thesis that we may get some backing and filling over the course of the next couple of weeks? Well, we're going into earnings season. We're going into Fed season. That means volatility, lots of it. So where is the volatility index trading right now? As of Friday, I should say. Right now, we at the close on Friday, we were trading at multi-month lows. And I'm going to bring out the old trader's adage, when the VIX is high, you got to buy. So it paid. If you bought equities, VIX 35, 35, 36, 38, 35, Heck, you got paid. You got paid handsomely. However, if you shorted equities at 18 and a half, 19, back down to 19 again, you got paid handsomely over the course of the past year. So let's take a look at where we're at in the cycle or at support levels on the VIX. We are at historical support where at times in the past it was wise, lighten up on equities, perhaps put on a short trade or sell covered calls. Do something to protect yourself. Now, the one bit of volatility that really nobody is talking about yet, but it's going to happen. And this really fell in line with the headline events that are unfolding, meaning Biden and all the announcements that are coming out about him, Davos, Klaus Schwab, what's his puss, Soros, COVID mandates. Now you have a new sheriff in town. You have the House Republicans, and they are on a tear. They're on a tear. Subpoenas are going to be flying. And you also have the debt ceiling, which is going to be negotiated. Now, this guy here, who I am not a big fan of, this is Kevin McCarthy, current Speaker of the House. He is a rhino's rhino. However, he had to cave into the hard right of his party, and he's going to have to negotiate very, very hard and get a lot of concessions from the Biden administration in order to raise the debt ceiling. What will that do to the US dollar? It's going to go up. It's going to go up. So early on, we may get a bid under gold because of fear of the unknown. But ultimately, if a hard deal is being struck, currency traders are going to say, whoa, 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 whoa. They're giving up a lot. And this may actually be a more disinflationary. And they may put a bid under the dollar, at least for the short term. So buckle up. This is coming up, I think, as soon as this week. All right, nat gas prices, we already spoke about. We have a polar vortex coming down the pike. And last look, nat gas was being bid up 7% in the futures market. Let's revisit it. Is it holding gains? Is it capitalizing? It's continuing up higher. It's up nearly 7.5%. In fact, we were higher at one point, and we're off the highs of the session. So nat gas looking the bomb moving into the new trading week. Let's go to comments. Sean, YouTube maybe shout out. I've thought about that, and it's a definite possibility. Back during the elections, I used to do live streams, and I used to they used to demonetize my live streams during the elections. So I wouldn't be the least bit surprised, because early on when I began with YouTube, the channel was growing consistently, and I won't be surprised if that's the case. They haven't demonetized me in a while. They haven't demonetized the channel, just each individual video that I do or live stream that I do, they sometimes don't like. And probably this one's going to get demonetized, but screw it. You can't worry about the pennies. You got to look out for the dollars, right? Klaus is supposedly sick. Well, I'm a Catholic. I can't say what I'm thinking. Tim, radical left pushing for more power. Yes, always. At least they're tenacious. Remember, the cover-up is always worse than the crime. Always. I heard that they may not have a diary or a roster of the visitors to his Delaware home where he's been doing a lot of his presidency. And if they don't have that, and they don't have video footage of it, who's been coming in and out of that house, this is making Watergate look like tiddlywinks. Franklin, CRM. You got it. CRM for Franklin. Jody. Hello, Jody. Welcome. MSNBC is going crazy about the debt ceiling. Too bad. 1.7 trillion passed without reading the bill. Yeah, and those days are gone. I mean, the Republicans negotiated a pretty good deal. So that's dollar bullish, I got to say. But yes, the $1.7 trillion in dollars in new spending is a major problem. Bob, you give more information and education in an hour than anyone I have listened to. Appreciate it very much. Tim, thank you very much. Believe me, that that makes my day. Really, I'll never forget when the dot-com bubble had burst, and ultimately I got out of my I was long of equities pretty heavily, but I was also using a lot of leverage, trading, selling put options. And I was selling at the money put options on PMC Sierra, which was a high flying chip stock back then. They're no longer around. I think they were bought out. And, you just goes to show you how naive you are. You're listening to the Bernie Ebbers of the world on CNBC. This guy was on, I say this all the time because it's worth repeating, that this guy was held up as the vanguard of what corporate governance should be, what corporate America should like. And it was only not even a year later after the dot-com bubble, he was in handcuffs. This guy was in handcuffs. Then you had Enron go down. These were all familiar faces constantly, day in, day out on CNBC, pumping up their stock. And you had he's now over at Business Insider, Henry Blodgett, this piece of human waste. Now is a editor at large over in Business Insider, and this guy was pumping up tech stocks, and he eventually got into trouble. So, if I could help, long story short, if I could help one person help to avoid that realization that all is not what it seems to be, there is a matrix, an information matrix, and you had better be aware of it, then I did my job, and I'm happy. It fulfills me as an individual being able to do that. So thank you for the comment again. Meaning to bomb, like bad or good news. Oh, it's going to be very good for Nat Gas, Jody. It's going to be very, very good. You're already seeing the price action. It's going to get bid. It's been beaten up fairly well. We have a short put position on Nat Gas, which is a long position. I know you hear puts sometimes. For those folks that are not familiar with options, when I sell a put, it means I'm bullish. When I buy a put, it means I'm bearish. I sold the puts. Therefore, we are the casino, not the gambler. My man Franklin on point as usual. TZ Burden. Franklin, I think. Yes, we are. LNG. Correct. You are absolutely correct, TZ Burden. A very, very intelligent crowd. I'm on vacation. I am not missing. Awesome. Thank you. All right, let's do some chart requests. Okay, let's bring up TrendSpider again. Automated technical analysis, folks. Help support the channel. If you're going to use TrendSpider, get a 35% discount. And sometimes they give you even a bigger discount when you go over to the website. But use the link below and get TrendSpider. And I give it away free with our silver and gold level memberships. Let's get to it. CRM for Franklin. We're going to begin with a weekly chart. Then we do a deeper dive. CRM looks good here. There is more upside to be had. I'm going to have to, we broke out last week ever so slightly. It is a breakout. Watch for a retest this week on CRM. That support level is going to be at around, what did we close? 149.51. Look at 148 and change. Give a take or dime. Let's look for a retest. But just keep in mind that seasonally, we're going into a rough couple of weeks. So position sizing matters. Purchase discipline matters. Touch, bounce, boom. Set it and forget it. Loving the W formation on stochastics. Those are a momentum indicator, not just two squiggly lines. Momentum is building. Building. Daily chart. Daily chart, again, we have a breakout. We broke out on Thursday. We did a retest on Friday. Successful retest. Reversed to close at the highs of the session. Stochastic strong. Path of least resistance here for CRM remains to the upside. All things being equal, meaning seasonality, all being equal, probabilities favor longs for CRM going into the new trading week. Let's see if we're dealing with anything else here. Bring up my fractal trend lines. Nah, this is a good looking chart. Good looking chart. Okay. Do we have any others? Annalie. Well, we have a couple. You guys are animals tonight. Joe. Joe for Jeff. All right, you got it, Joe. I mean, good, Jeff. Screwed myself up there. WBA. TAP. Is that Molson Coors? Annalie. I was watching Carter Worth, who I happen to like very much, and he's bullish on the REITs. And I haven't checked his charts yet, but he's usually pretty accurate. So, Blue, do me a favor. Give me just two, all right? Give me two top favorites. Thanks, Paul. No, we can do Qs. We have to cater to you, Jody, because we do not have enough females on this show. So it is mandatory that we cater to you to keep these mad lads with all this testosterone under control. All right, so MNST. CELF. CELH. Duh. Okay. All right. Which one do I want to go with first? Let's go with Joe. Now, we just went over agriculture prices. Intuitively, I'm going to probably say that I'm bullish on Joe, given the fact that ag is beginning to catch a bid yet again. So let's check it out. It's definitely basing. I would really like to take a look at these. Are not, I'm sure they're not very liquid markets in the options market here, but implied volatility may be high, making it worth it. No, there's no IV here. It's only got an IV rank of 16. The options are cheap. All right, so selling premium is not an option here. Pardon the pun. Pun completely intended. All right, so let's talk about this. So we obviously have a real severe breakdown on Joe. This is an ugly chart, but I happen to love ugly charts that are long in the tooth. A lot of damage has been done here. So when I look at this, I say to myself, is there opportunity here? And yeah, because what we did last week, and this always goes back to what I like to say, all down weeks are not made equal, right? So even though last week was a down week, you had some bullish price action on the week. What does that mean? Well, first off, let's begin with this. There's your typical bear flag setup. We breached it. What do we do? As expected, continuation breakdown to the next support level. Logical. Happens continuously. So what did we do last week? Did it respect prior support levels? Check the box. Yes, it did. It did exactly as you would expect it to do. Now, does that mean you go stepping in and jumping in with both feet on Joe and buying here? No. Close watch though. And the other thing I'm looking at here on Joe weekly time frame are my stochastics. They are still in a decline. But what I'm going to be looking for here is this. I'm going to be looking for a higher low. And then I'm going to be looking for a breakout, just like you had back here. In short, a W formation. Higher low, breakout. What happened back then? Rally. That's what we're looking for. All right, so again, these are not two squiggly lines. These are your momentum indicators. And what are they telling us right now? It's still weak on a weekly time frame. That, however, is I'm willing to wager a nickel, a wooden nickel, that on a daily chart, we're going to look pretty bullish. And we did. We popped down. We retested that, not one weekly one support level, but two support levels. We rallied and we broke out above another one. You want to start nibbling here? Do not go chasing. Please do not go chasing. There's going to be plenty of backing and filling, false breakouts. This is going to take a couple of more weeks to fix before it begins to gain momentum and move up higher. It could take a couple of months. So we'll set up an alert here. I don't want too much sensitivity. This is my time right now to demand top price. This is an ETF or ETN that needs to earn our investment dollar. Therefore, I want to see it pull back, do a successful retest of a daily support level. So right now, I'd be looking to accumulate, nibble, 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 accumulate Joe over the course of the next several weeks. I would average in. But I think that we are very close to a bottom here, at least a tradable bottom. Here's a monthly chart. A lot of devastation here. So out of the ashes rises the phoenix. And taking a look at a monthly chart, this is the value of using multi-time frame analysis, is that when you look at the monthly chart, you're not going to pick it. You're not going to pick up what I'm observing here on a daily chart, not even on a weekly chart. You're going to see it on a monthly chart. What is the observation I'm making? Well, where we bounced off of on the week last week was the breakout point from back here in May of 2021. So I'm thinking as you proceed into, believe it or not, we're already thinking about May. As you proceed into May, what kind of seasonality do we have here? And might it work yet again? Oh, look at the seasonality. This is only going back 5 years, though. All right, so this is limited data. It's all the data that we have. Very thin data. Do not rely overly on this data. It's only 5 years. Caveat's been said. That being said, May up 80% of the time over the course of the past 5 years. So the months between now and May, not that great. March is the worst month by far for Joe. Oh, excuse me. Yeah, March. And if you get another pullback, you may get a rally between now and March on that secondary pullback. Watch on a weekly chart for a double bottom setup, weekly time frame. Then you pounce. As long as you don't break down to new lower lows, which we saw last week. You don't want to see those support levels break. That's Joe. Pretty long-winded. But I know Franklin likes it, and a few others like it as well. All right, moving on. I'm going to try not to be as long-winded here. WBA, this is Walgreens Boots. They report soon. This is a very volatile stock. I know it. And it's got pretty tight markets in there. This is a monthly chart. Higher low, we're respecting 3670, which is support. So this is not broken out yet, but we are well off the lows of the month. Things are looking up. Walgreens Boots weekly chart. Weekly time frame, we did close slightly below support. Actually, no, I stand corrected. I did not see this doji formation. There we go. That's better. I thought this was last week. It's actually this week, this past week in green, where we closed up on the week. Doji star formation, a sign of indecision. That is bullish because that indicates that the recent trend, which has been down, may reverse and give you a trade off of this 3670 mark. So let's get our crayon out here. You have resistance immediately above. Daily view. We broke out. We broke out on the 11th. Retest 1, retest 2. I think if you move through I think this could be bought. You want to nibble on it, nibble on it. I think it's okay for a trade. Stay small, tight stops. If we break back down into this downtrend channel, you got to get out. So please remember, seasonality week for the next couple of weeks for the market. So remember, position sizing and timing discipline are everything for the next couple of weeks. So I would become more aggressive as we began to take out these most recent highs. So nibble now, stay small, add more on strength. Walgreens Boots firming up. TAP. This is a staple trade. Now the staples have come under pressure of late because it's been a risk-on environment. Monthly chart. Not looking good here. You know, we're off the lows of the month. We're positive now, but we are down below support. Stokes are in no man's land. There's no momentum here. Weekly chart. Again, we're holding support at 50. I'm looking for the setup here. We had broken back down into this trading channel. These are the automated trend lines. Watch, I'm going to take them off. This is the algorithm, AI, not me. Take them off, put them back on. All right, so we broke back down into this trading channel. That's a breakout point failure. I'm not seeing a compelling reason here to get long. Now, if we manage to break back out and close above, let's call it 51 bucks a share. We closed at 50.76. We're close. No cigar, though. Let's throw up raindrop charts. Do we get a doji star here? No. It's struggling at resistance. I can't condone a buy here. Daily chart. It's trying to put in a higher low. Here's your resistance level. It's got to hold 49.90. If it breaks out above 51 bucks a share, again, we're being brought back to that $51 per share mark as a buy entry point. I think that's what you got to wait for, is a close back above 51 bucks a share. We're very, very close. So they should be able to do it. If they can't do it, it means it's a weak stock and you want to avoid it. And I definitely would not short it. Annalie? All right, so as I mentioned earlier, Carter Worth was doing some analysis on the REITs. And with Annalie anyway, you know, it is looking strong here. This is a big dividend payer. We broke out last week and recaptured 22.14. So on the week, it's looking very strong. Daily chart. I think this could be bought. I like this. We broke out on the 11th. Bit of an attempted continuation breakout. It was rejected. You got a retest of the breakout point on the 13th. I think this could be bought. Annaly looking strong. You're going to have resistance up here, $24.25 thereabouts. But otherwise, good for a trade. Annaly looking good. QQQ for the lovely Jody. So what I want to point out here is, a lot of times I talk caution because not enough attention is paid to risk management. And, there are times where my risk management gets off. I had a huge position in Tesla. We made a lot of money in Tesla. But I had to exit that position because it was way too big. So you gotta worry about your risk. And when we talk about triple Qs, this is an index unto itself. So we need to keep in mind, what's the macro trend? The macro trend remains down until it's not. I'm not saying we can't break out and begin a new bull market. Sure. What do I know? So right now, what this chart is telling us is that we remain in a very tight consolidation, and it's a bullish consolidation for now anyway. This is a monthly chart. We're only halfway through the month. Maybe we'll close at the highs. Maybe we won't. Maybe we'll break out. Maybe we'll break down. We don't know yet. So the bullish news, I have to say, is that we've stopped going down. We're holding 260. If we break 260, you're going to see Armageddon. You're going to see it, because that means you've taken out not just the October lows, but you've taken out the June lows as well. That's the macro view. Now let's look for a setup. Now the setup here is twofold. One, we broke out last week above a secondary downtrend line. What does that mean? Well, remember, we had broken out above trend back here in August, but then were rejected and we broke back down, creating a new data point for which to connect the dots. So TrendSpider's already done it for us here in red. I'll take it off, put it back on. That's the artificial intelligence. So what they're telling you is that this is primary resistance. So while we broke out last week, we do have a more significant resistance level at current, assuming it's a straight shot, up at 286 per share on the trip Qs. So we have a breakout bullish. However, immediately above is some resistance, not that far above. So be aware of where we're at in the cycle. I'm loving the momentum indicators, high or low. So I could talk all I want about the yield curve, this, the dollar, that. Folks, if we begin to break out on equities, we break out on equities. I could continue to talk about the yield curve and how it's going to cause a problem down the road. I'm reviewing monthly charts of the yield curve. That problem may not reveal itself in the resolution of the inverted yield curve from 6 months, a year, 2 years, next week. I don't know. We don't know. Therefore, all we're going to do right now is take that negative problem that we know is out there and it's haunting, put it back here, never ever forget, never get too bullish, and trade the market that you're given. The market that we're given right now is a bullish market until it's not. So Stokes gaining momentum. We have a breakout weekly time frame. We have a higher low weekly time frame. Things are setting up. Are we still in a downtrend? Yes, of course we are. Daily chart. We broke out on Friday of last week. So the path of least resistance remains higher. If we get through 285, which is that primary resistance level up top, we could rally all the way up here to 304. Will I be looking to short up there? Yes. Yes. because that's where the sellers are. And could be up at 285 as well. So that is the trip Qs. MNST, Monster Beverage. So again, this is the AI, artificial intelligence, automated trend lines off, put them back on. So this Keltner line here, this fractal trend line in highlighted green, blue, however it looks on your screen, is acting as support now. We had broken out above it, and now we're consolidating along it. Bullish. However, we have resistance immediately above at 103 per share. We close above 103 per share, it's game on to the long side. If we break down below last week's lows, you got to avoid this stock. Daily chart. The daily chart looks very, very good. Really, really good. I don't like the Stokes that much, but they're improving. What I do like is price. That was a goof on my end. Sorry about that. Now, on price, we saw an outside reversal bar, aka a bullish engulfing. If you're not familiar with the terminology, folks, I have a 5-part video tutorial on my top 5 favorite candlestick patterns, free. Yours, link below. So this is an outside reversal bar, bullish engulfing, very bullish, in all probability, Monster Beverage going up tomorrow. But you're going to have resistance up here at 103 per share. You get above 103 per share, and it closes there, it's a buy. Last chart up for this evening, because I'm losing my voice, CELH. I don't know why I can't get that right tonight. Celsius Holdings. We have gone over this one before. This is a nice chart. It's very nice. We had a breakdown the week before last, and then you had a negation of that breakdown last week, and a mother of negations. I mean, wow, this is really, really sweet. So might you get a retest of these support levels at around $100 a share? Sure. Would I be a buyer? Yeah. That horse may have left the barn, because we've already broken out on a daily time frame. We did so on the 11th, retest number 1. On the 12th, follow through on Friday. This looks like it's going up higher, bullish. Jody, you are very welcome. Thank you for being here. Tim, thank you, sir. Thank you for the great comments. Franklin, profitable trading week to you, sir. I'll talk to you tomorrow. Folks, everybody have a really, really awesome and profitable trading week, and hope everybody had a great weekend. And if you're not currently subscribed to the channel, please do so. It helps me out with the YouTube algorithm. And don't forget to like. Thank you. Have a great night. Be well.